I get asked these questions all the time. Figured I'd roll this into an Ask Bob Mortgage show so you guys go and enjoy. So one of the questions I get is, what's the minimum credit score to qualify for down payment assistance, these grant programs? All right, I'm here to tell you, you can go down as low as 600 on your credit score. Now, it depends on the type of program that we're going to do, whether it's FHA, VA, USDA, or conventional, and how much money you're needing from the state, okay? But minimum credit score is 600 for these grant programs, and they go all the way up to 680, okay? And the grants will be tied to the score, either 2% all the way up to 7% of that grant amount. So the grant is a percentage of what you finance. So you're financing $100,000, you're getting a 7% grant. That's $7,000 to pay for your down payment and closing cost. Okay, so minimum score is just 600, guys. Hey, I know you guys are, I'm sure, out there enjoying the day much like I am, but I want to talk to you guys about the difference between pre-qualification and pre-approval. Okay, and I know this is like some magical, mystical difference between the two, and I want to break it down and show you how actually really easy it is to understand. One is I'm not validating or vetting anything. The other one is I'm actually vetting everything, right? So the pre-qualification, that's just us having a conversation, or you filling out like that link below. Click on that link, build your profile. It takes about 10 to 15 minutes. It gives me great guidance on where you live, work for the last 2 years, income, assets. Yeah, we'll have to take a look at a credit report, but that happens whether it's a pre-qual or a pre-approval. At that point, we're just taking your word for everything, gathering that information and saying, you know what, based on the information you provided, you're pre-qualified. Good job. But you know what, you can't buy a house that way. You can't even get in to see a home with a pre-qualification letter. They want a pre-approval letter. So how do we move to that next step? Simple. We just vet the items that you told us, right? We're going to ask for pay stubs. We're going to ask for W-2s, tax returns, bank statements, all those items, just to make sure what you told us was 100% accurate. That's called pre-underwriting the loan. That's where I'm able to give you a pre-approval letter, and that is going to allow you and your agent to negotiate the best possible deal for you on that sales price, and allows us to know that I can deliver to you clarity and certainty so that you could actually close, and we can do that in 8, 10, 12, 14 days, whatever you need. Hey, are you guys like frustrated with this home buying process, approval process? You don't know what an underwriter is asking for to give you your approval? Well, I'm going to break it down for you. It's going to be my 5 C. Actually, it's my 4 C's of underwriting. This is the 4 things that you need to focus on to get your approval: credit, cash, capacity, and collateral. Credit, guys. Now, by the way, if that's any of you, click on that link below. Build your profile, and I'm going to deliver all this stuff to you on a silver platter to get you guys approved. But credit's the first one. We got to know what your credit looks like in the very beginning. Mid scores, you and your borrower, or just you. I got to know what that score is made up of, okay? Cash, where's the money coming from? It's cool if it's under the mattress. I just need to know that so I can make sure that we move that forward right in the buying process when we build the profile. Capacity, I need to know really, how much money do you make? Where's the money coming from? Is it from bonuses, commissions? Is it self-employed? Am I using bank statements? That's why we get into that in the very beginning, guys. I need to know the capacity or the income so I can determine how much home you can borrow. That's called your debt to income ratio. And the last thing, the 4th C, is collateral. Okay, you're gonna buy a $200,000 house. I just gotta make sure it's worth $200,000, and I send out an independent third-party appraiser to validate that and make sure that we have that. And maybe it's worth $210,000, we got you into $10,000 of equity, but I gotta know that. So before I go, guys, click on that link below, build your profile. I'll be able to deliver to you guys the answers to those 4 C's before you ever get out there looking at homes.